presentation. Okay, so if at any point you wish to say something, you can raise your hand and then I can unmute you. All right. This class was very successful because yeah, I think we all coordinated ourselves very well, and then we are very familiar with the app. So yes, if you have a question, you can just drop it. I'm seeing all the questions coming in while I'm making my presentation. So yes, good evening to you guys once more. Okay, so this is the part where you now begin to learn, you know, what to do, how to trade, what to press, what not to press. Okay, so I'm going to give you, like, you know, what I'm going to give you is a little bit different from what you find out there as regards, you know, trading right. Okay, and I mean, most of the things you already know. So it's going to be different. I can assure you that it will be different. Okay, so yeah. So yeah, you already know I'm Bennett, Ben Mario, okay, Wokocha, aka Peep Surgeon. All right, I'm a trader. Okay, I trade forex for a living. All right. Here's the disclaimer. Have a couple of certifications. Telling you that everything I am giving to you today is for okay. So I'll just go to the slide, and then here what we have is the disclaimer. So do not take it as says, oh, an advice. I think I showed you my disclaimer, but I'll still have to show you again. These are the things we're going to go through. Okay. These are the objectives of the workshop. All right, so you're going to have a full understanding of how forex market works. You understand all these terminologies. You know, you're going to get yourself a brokerage account, and then I told you today that we're going to begin by investing into BTC. For those of you who have never done these investments before, those of you who are very, you know, will I say comfortable, or you just keep your money in your savings account and you have no need for, you know, you don't have any need for, you don't have any plan, you know, for a long-term investment, something that, you know, you hope to withdraw in the future. You know, a lot of us Africans, you know, our parents invest into us, right? What our parents do is when they do not have any insurance. Our parents have no insurance at all. So what they normally do is they will make sure we get everything we need. We go through school, we do everything, okay, so that when they are old and too weak to make money, of course, Nigeria does not have a good retirement plan for their citizens. So, yeah, when they are old, the children is, you know, more like a human insurance, right? So it's the children that will now take care of them in their old age. You know, so what you can do is while you are, you know, taking care of your kids and doing all these things for your children, you can have all these assets, more like a retirement plan, right? Okay, but the purpose, if you're heavy, or if you keep to it, it can lead to financial breakthrough, and then you can be financially free within a space of 10 years. You can be financially free, okay, within a space of 10 to 20 years. You can be stinkingly rich, okay? So it's a journey, and it's going to take time. If you're going to start from scratch, no father, no mother, no inheritance, nothing, is going to take time. All right. And if you work a job, that little thing you are doing right now, which is your source of income, is your own 10%. That is where you are going to get your financial breakthrough from. Stop thinking or hoping that something else will come from somewhere. You can get a better job and do other things. There's nothing wrong with that. But the point I'm making is, don't continue to think that one day something will give you big money and then you'll be a big man. Okay, you have to start start small, have an investment, idea and plan. And then it's a long-term plan. So if you have any source of income now, just keep on investing and investing and investing until you get to the point where, boy, you cash out, and then you take big deals, multi-million deals, and then you have a breakthrough. I showed you all that in details yesterday. How you can start from scratch and then gain financial freedom within a space of 10-15 years. Practical step that you can take: get a job, save into an asset, take some time, let it grow, let it grow, let it grow, keep it for about 5-10 years, and then depending on how much you're saving and how much these assets rise, cash out, get a landed property, go into real estate, get a house, one house, get your rentage from this first house. After some time, you can buy another house. You don't have to buy a full building. You can buy a flat and rent it out, and then you save the rentage to buy another flat, right? And then you save the rentage. Before you know, you have a building to yourself. You sell it, buy a building, and then before you know, from one building you have 2 buildings, and then 3 buildings. If you have 3 buildings, according to the law of monopoly, it's a game, but it's real, right? According to monopoly, you can sell 3 houses to build 1 standard hotel. All right, and then once you have 1 hotel, you're financially free. You don't have to work for money anymore for the rest of your life till you die, right? So yeah, that's what you should do. Okay, so we're going to start our journey today by getting a Luno wallet and then putting some money in it. I have all the slides that are going to help us to go through all of that. So I'm going to teach you everything in Forex, how to think in probabilities the way professionals do. I'm going to also teach you how to go into the market, buy and sell something. I'm going to give you a simple strategy that you're going to use to make money, a simple strategy. And then I want to tell you, the strategy I'm giving to you is not the strategy that I used to trade. Okay, so that you don't think that's all there is. I'm just giving you a simple formula that we can use to practice buying and selling. Then we can start from this point and then build on it, guys. Okay? All right. So tell me, I'm going to unmute you. I want to hear from you. Why do you want to be a trader? Okay? Why do you want to be a trader? Why do you want to be a trader? Let me hear you. Okay? Tell me why you want to be a trader. So I have allowed you to unmute yourself. So unmute yourself and then let me know why you want to be a trader. Okay? Let me know why you want to be a trader. What's the common trait of all those seeking refuge in the kingdom of financial market? Right? What is that thing that's making you to, instead of doing something else? This is Saturday evening. Okay, we started the class late because it is Saturday. We are doing Saturday things, right? So, but you're here. Okay, you could have been somewhere else with your friends. Why do you want to be a trader? Okay, what is the draw of the incredible challenge to become a consistent performer in the colosseum of opportunities? What is the ultimate reason why people want to be traders? Somebody said to increase my income. Okay, that's why you want to be a trader. To make money. Somebody said to make money. Somebody said to make money.
Financial freedom.
Financial freedom. Financial freedom. Makes sense. Yes, you're getting close. You're getting close.
To have more time to yourself.
To have more time to yourself. That's the answer, man. It's freedom. It's freedom. Thank you so much. It's freedom. You want to be free. I'm telling you, that's the reason why we're here. That is the reason why God created us in the first place, so that we can be free. Right? That's everything we do as a trader is an attempt to be free. I wrote this article with one of the newspapers. I say a trader is a defiant. A defiant is like a traitor. Like somebody who is against something. It's a defiant of the system of corporate slavery, institutional lifelessness, and system fatigue. A trader is a pursuer of self-identity. A trader wishes to take ownership of his own outcome, to lay his own path to financial and spiritual prosperity. A trader is a designer and an architect of his own future. A trader by nature is what is man's original virtue, as designed by the Creator, but that has been forgotten. Okay? And you know what that is, right? It's freedom. That's why God created Adam and Eve. In the first place, everything he made it for us so that we can be free. All right? Free from the shackles of an authoritarian system. Free from debt slavery that consumes most of the Western population. Freedom to determine one's own journey in life whilst not being at the mercy of a multinational formless culture. Okay, so when you're having a challenging trading day, as you always will, guys, all right, remind yourself why you're here, why you want to be a trader. You want to be free. You want to take advantage of this opportunity, $6.6 trillion. You want to be in this cycle and make money along with the other guys. You want to live and work anywhere in the world. By January, I'm going to be in Dubai. Okay, I can afford to be in any country in the world. That's what you can do when you're a trader, right? You never answer to any boss. Most of the bosses I answer to are just our superiors in Cyprus, okay, the heads of City Forex, right? And then these are like the I told you about. We have a pool of traders, okay, so majority of them are in Cyprus, right? And then I mean I'm trading myself, right? I can choose to wake up and not go to the office. Can trade from my bed. You don't answer to any boss. You are free. Can live your life the way you want. Right? And then I'll tell you what, many people aspire to this, but few succeed. And the record says it's just 5% that will succeed. Only 5%. Okay? And then the reason is obvious. Many of the things I'm going to share with you today are the things that a lot of people do not even know about, and then they're dreaming. They're dreaming to reach, to go in and make money. They're dreaming to go into the market and make money, and then they have no idea. They have absolutely no idea about most of the things I'm going to talk about right now. They just want to make money from Forex trading, and they do not know what they are doing. And then they lose thousands of dollars, and they still remain amateurs, right? You cannot blame them. These guys don't have the information. You cannot blame somebody for not knowing something. I told you Jesus cried because he said, this, if only these people knew the things that beheld their peace. But now these things are hid, right? It is hidden from them. If you knew what to do to make money consistently, I'm sure you would do it. If you knew all the information I'm going to be sharing with you in the next 3 days in this workshop, I'm sure you would do it. But you don't even know about it. You cannot operate beyond your knowledge. You cannot operate. I told you that what you're making now is your capacity. If you want to make more money, increase your value, increase your knowledge capacity. You learn more things, you increase your knowledge, you make more money. What you are making is what you are currently worth. I don't know why my dog is disturbing. Yeah. Okay, so yes. So this is a warning for those of you who, you are just here, passerbys, you just want to see, you are used to attending Forex things, and this is just one of them. This is not just one of them. We're serious. Okay, and I'm warning you now, if you know that you are not interested in trading for a living, this whole meeting is not for you. You can just sit with us and enjoy the conversation. But if you have something else to do, you better go and do it. Okay, because I want to believe that I'm talking to people who are looking to stay in this market for a long time, long enough to figure it out, long enough to make consistent income from it. Income that will surpass their everyday income from their jobs. Right? Those are the people I'm talking to right now. Okay, so I'm giving you this standing warning. All right, so you got to view Forex trading as a profession. It's not something you do once and then you're going to call me and say, Peter John, give me a trade. that I want to. I have $100. Give me a trade now. Let me use it and see if I can buy Kurula. Okay, so I'm talking to people who are going to trade for a long time. All right. So if that's not your plan, then this meeting is not for you. All right. A lot of people reach out for this goal. Okay, they want to be traders. Some people talk to me. They say, "I want to quit my job and go full time into this thing." All right. You know, many people fail. I've seen people, lawyers, doctors, people who leave their full-time job and become traders, but they are still struggling to make consistent profit. Of course, because they have the wrong mindset. If you do the right thing, you make money. But if you do not have the right education and you don't know the right thing, you don't know how professionals trade and how they should trade, you lose money. You will not be consistent. You just have up, down, up, down, up, down. The goal of every trader is to have a steady rising equity curve. I'll tell you what I mean. All right. That's the goal of every trader. You want to have a steady rising equity curve. Okay. So you want your curve to be, there are three types of traders. Okay. The first kind of traders, we call them boom and busters. Okay. The first one, we call them, boom and busters. Right. These traders, their equity curve will look like this. When I say equity curve, if they have capital, maybe 10,000 naira, they will raise it to maybe 20 or 50,000 and bring it back down. Then they raise it up, bring it back down. Raise it up, bring it back down. Okay. So you see them, they are called boom and busters. All right. The second class of traders, these guys, they are bad traders. Okay. They are gamblers, right? They don't even make any money at all. All right. They just go boom down and then they blow the account, right? And then this is where you want to be. Okay. You want to have a steady rising equity curve, right? You want to have an equity curve that looks like this, right? You want it to go, of course, you're going to be losing every once in a while, but ultimately, month after month, you should be making money, right? This is your goal. All right. Your goal is to have a steady rising equity curve that goes like this. So this should be the goal of every trader, right? Should be the goal of every trader. So take note of this. Okay, so this is why 95% fail. They are either here or here. Okay, so take note of that. And then the game is hard. It's actually hard. Okay, I'm not sugarcoating anything here because we mean business. Okay, we're talking serious business. All right, so I'm not sugarcoating anything at all. Right? You know why it is hard? It's hard because what's happening? Okay, so it's hard because there are many things you have to deal with: emotions, spread, commissions, some of the mindsets that you have. Some of you have a lot of financial needs, you have a lot of pressure, and then these things always affect your trades. Okay, sorry about that. Okay, so these things, it will affect, your overall performance, and then it will be difficult for you to find yourself, here. This is where you want to be. You know that you make losses. You make losses every now and then. You make losses every now and then. Of course, these losses are called clusters. Okay, they are. You have losing streak. Every once a while, you have losing streaks. Okay, every once in a while you have losing streaks. Every once in a while you have losing streaks, right? So, but ultimately, because you have a plan, you make money. All right, and then ignorance. Okay, some people don't even know anything about the realities of trading. They don't know that the max you can make is about 20% or 30% per month. Some people don't know anything about risk to reward. They don't know that if you're going to risk a lot of your account size, you're also going to make a lot of money, right? But this also means that if you're risking too much of your account size, you are likely going to suffer, you're likely going to suffer a drawdown, right? You're going to suffer a drawdown. And when you get a drawdown, you might not be able to recover. And then they're ignorant to the effect of emotions. And then I'm going to tell you how to avoid all of this in the first place. All, right? And then inadequate preparation. Some of you will go into the market unprepared. You just learn a few things and then you go in. You don't have a plan, you don't have a method, you just want to buy, right? And then risking too much, obviously. Emotional and thoughtless trades. And then using a system without an edge. Edge is the reason why traders exist and why traders can be consistent and why traders can make money, right? Edge. Okay, so yeah, I'm going to in the course of everything, you begin to see all these things. These are the pitfalls. 95% fail is not a joke. You hardly see all the people on Instagram, Telegram, all these guys that make you feel like they are the best traders in the world. Majority of them are not genuinely making money. They are not genuinely making money. And then you see some of them get wiped out. They are not in the market anymore. They just disappear because they've been blown out of the market. All right. So yeah, I told you that somebody was asking where do I start from, and I said, okay, yes, this is the whole essence. Okay, if you're going to benefit from all of this that we're doing right now, if you want to benefit from all of this, this is where to start from. This is all you can expect. Okay, you cannot get anything more than this. I'm being very, very, very honest with you. If you're thinking, of course, you have to ask yourself, if you're thinking long term, then you're going to, something cryptocurrency. All right, cryptocurrency. This is what is available to us. I'm talking Nigerians now, Africans. Okay, this is what is available to us. You can easily open a wallet, a Luno wallet, and then have an investment that is going to last for 5 to 20 years. I'm being honest. If you think of this whole thing differently, you will not make any money. It takes time. You got to have a 5 years plan, 10 years plan, 15 years plan, 20 years plan. This is called a retirement plan. And that's why I told you for BTC and the rest of them, you are looking, for a long-term return. You're not looking for monthly, return. If you're thinking short-term, you will blow your account. You will lose your money. All the people who lose money are people who think short-term. If you think long-term, you will never lose your money. As long as it's an asset. It's an established fact. And then you can invest in a tripartite system. Okay, and I told you about eToro. It's a social trading system. If you invest in eToro, you're not looking to take your money out overnight or in 1 week or 1 month. You're not looking to double your money. In eToro, you're looking to make a profit of around 20% per year. Per year. Of course, this market is very volatile, and you can have, a lot of percentage within these 5 to 20 years. BTC can increase as much as, 5,000%. It's possible. Coins, they are very volatile. They can rise. And then even if you have small money, 10,000 naira, when 10,000 naira is multiplied this number of times, you know that it's a lot of money. Okay, so that's what we're saying. It can't happen overnight. Okay, so we're going to start with a Luno wallet. I think I have a slide, the next one or so. And then if you're looking for short-term, something short-term that is stable, I can recommend City Forex. I work with City Forex and I understand the system very well. It's a stable system. It has been operating for a long time. And it can give you as much as 15% every month. Okay, no questions asked, right? And then alternatively, if you do not want to invest with City Forex, learn to trade by yourself, and then you can make around 20% monthly. All right? So these are the ways that traders can benefit from what we're doing here right now. Okay? These are the ways that we can benefit. Sorry about that, guys. App quitted unexpectedly. I mean, these are some of the glitch you have with the app. Sorry about it. Okay, so now let me know if you can hear me. Sorry. Yeah. You're right. Sorry about it. Sorry about it. So yes, this is why we're here mainly. All right, we want to become consistently profitable. All right, so this is the roadmap. This is everything you need. I don't care who you are. I don't care what you know. All right, this is the roadmap that you have to follow. Okay, I have carefully taken this roadmap. I've looked at it and I feel like this is all you need. If you get this, you make consistent profit. Right, the first thing you need to do is understand your personality, and then you need to learn. You got to learn. You cannot take it away. Okay, somebody's saying he's having challenges with the Luno wallet. How can I join the Telegram group? Is the easiest thing to do. Search for City Forex. City Forex is spelled C-T-C-I-T-I, City Forex, right? City Forex Trading Institute. On Telegram, you find our group there, and then you can join it. Then search for Luno. You find everything posted about Luno. The link, the PDF file, everything is there. Or just scroll up, because we had the seminar last week, so those things are still, they're not too far away. Okay. No. We do not have an office in Owerri right now, but I think we might have an office in Owerri soon. We are working to have an office in Dubai. That is the next place we're looking to have an office, not in Owerri. All right, but I think maybe with time we'll get to Owerri. If we get enough traders in Owerri, we can have an office in Owerri. Yeah. Yes, you can. Yes, that's very correct. That's very correct. Yeah, restricted due to failed verification. What I would advise you to do is you have tried to verify and it failed. If you try to create another account, because your name is already existing with them, they might bounce you for trying to have two accounts. So what you can do is contact the customer care or try to get a valid ID card. You actually need it. Okay, you need a valid ID card. Get a valid ID card and then start the process over. All right, just start the process from scratch. Okay, so yes, you need to know your personality. I'm going to talk about this. Do you want to trade actively or do you want to do this thing passively? You want to stay on your job. Jim Rohn says that you got to find something that you can do passively while you are working on your full-time job. Okay, so that over time, that thing you do passively will eventually become your full-time job. You do it actively. It makes sense to me. It makes a lot of sense to me. All right, this thing that you do passively, after some time, you learn it to the point where it's now your full-time job. You now do it actively, right? It makes sense to me. It makes sense, and that's the goal, right? With time, you want to do it. You want to just have enough capital where if you're trading with FTMO and you're trading $100,000 account, if you make 10% on $100,000, that's $10,000. You have around $7,000 every month. That's a lot of money for an average Nigerian. Okay, $7,000 is around 3.5 million or 4 million naira, around 3 million naira. So if you make 3 million naira every month, I mean, that's enough. You can call that freedom, right? Even though you're still working. So, but with that, you can build your career really fast. And then you can have investments and real estate, landed properties that can truly get you to financial freedom. Okay, so that's supposed to be the goal. All right, so are you going to trade passively or are you going to trade actively? All right, are you going to look at this thing with a long-term approach or a short-term approach? What do you want for yourself? What kind of trader do you want to be? Are you going to be a scalper? Are you going to be a position trader? I'm going to explain all this in the subsequent slides. All right, so you're going to learn how to trade. Take your time to learn. I'll teach you how to place trade within this workshop. But again, it might be slightly difficult because we're not seeing each other one-on-one. So the only thing I can do for you is to show you screenshots of what to do. Now, if you're actually doing it, it's up to you. I mean, it's like taking a horse to a river, right? It's the horse that have to actually, bend down and drink water. Can't force the horse. So I'm going to show you everything, and I mean it. I'll show you everything. So it's up to you to actually do the practice and then benefit from it, right? So I'm going to help you create a trading plan, a very simple trading plan that works. Simple and effective trading plan. I'll give it to you. All right. And then we're going to have to do some back testing. This is what you need to do. These are the steps you need to follow to become consistently profitable. So if you have a trading plan, the next thing you want to do is to back test it, practice it so that you perfect the execution of that plan. If you're telling yourself, I want to see A plus B before I can place a buy trade, or I want to see C plus D before I can place a sell trade, right? If this is your plan, you have to practice it so that you can perfect that execution. You can perfect how to, actually take the trade, right? Without, doubts or fear or worry. You can recognize it and place it correctly, all right? And then you do a back test. The market has been existing for a long time. So you scroll back, see how it performed in the past, all right? That's going to help you to know how that system does, and then if it's good enough for you to put in real money, okay? So, and then if you cannot backtest your system, if you design a system where you cannot go back and do a back test, do a forward test, all right? Trade with paper money. When I say paper money, I mean the broker gives you some demo account where there is money in it, like $10,000, $100,000, $1,000. So you can trade with that for some time, okay? And then practice that your system with real trade for some time before you put in, real money. All right. And then when you have done this, I mean, it's not time to go live. You have to define your edge. You have to know that, okay, this is what I recognize in the market. If I recognize this thing in the market, I will buy or sell. That thing is your edge. I'm going to explain what edge is. You have to understand win rate, risk to reward. These are the things you have to understand. This is what makes you a trader and not a gambler. If I place a trade, I cannot take anything less than twice as much as I'm risking. It's better I lose my money than to take less than 2 times of what I'm risking. Because if I have a habit of taking less than 2 times of what I'm risking, at the end of the day, I will not be profitable. If the trade is good, let it give me as much as twice. If it's bad, then let it go away. But I make sure that when it's going away with my money, it's going away with just 1% of my capital, right? Or 2% max. And then when I'm right, and it's giving me money, it's giving me as much as 4%. Okay? So yes, perfect, the execution of your plan, and then you take what we call journaling. All right, you journal. When you take a trade and the trade gave you twice as much as you risk, you look at it again. Take a screenshot when you're about to take that trade. Some people think of journaling as, you have to have an Excel sheet and write prices and write, everything. But people don't keep it. It's difficult to maintain. What is realistic is when you're about to place your trade, just take a screenshot immediately. And then if you can write on that page with your finger, you just write, okay, this is so strategy, and this is what I saw before I place the trade. You can write it with your fingers in few words, right? And then when you come back to see, or what you have been doing, you can scroll back to these pictures or screenshots rather. And then you can now say, okay, yes, this trade worked out, this one didn't work out, this one worked out, this one didn't work out. When you start to trade again and you recognize or you see the ones that didn't work out, you leave them. Let's say the candle wick was too big, but it still met your trading criteria and you place the trade and it didn't work out. You say, okay, the candle was too big when I entered this trade and it didn't work out. Maybe whenever the candle is too big, I will skip the trade, right? So it will save you. Whenever the candle is too big, you just leave the trade. I'm taking this as an example, right? So that's the essence of journaling. And then you define your expectancy. Expectancy is what this whole thing is about. What is your expectancy? Okay, if I look at you, I can now say, okay, Anthony Alabi, you can make 7% every month. Chidi Wonsu, you can make 20% every month. Caleb, you can make 15% every month. That's what we want, right? That's an expectancy. Right? We want to know what can you generate at the end of the month. You know yourself. Right? And then when you have defined your expectancy, I mean you get your trading capital. If you want to do a subscription with FTMO, fine. If not, if you have enough money to go live, $1,000, $10,000, fine, go live and then trade. If you don't have enough money, maybe you have ₦1 million, you can open a Naira account with FXTM. They have a Naira account, minimum deposit is 20,000 Naira, right? You can trade with that. But if you trade with 20,000 naira, you should look to make just 4K every month. I'm being very realistic with you. If you try to make anything more than 20, maybe you try to double it, make 50K or so, you throw 20K away. You blow the account. I don't care how good you are. All right. And I'm going to explain why you're going to blow that account. I'm really very good. I can move a 20,000 naira account to 100,000 naira in one trade sitting, but it's not consistent. If you want to take care of your child, your family, you want to pay your rent, you want to pay the bills, you want to do everything that you need to do, you can't gamble. You can't do something that is not consistent, right? You want to do something that you are very, very sure that at the end of the month, that 4,000 naira that is coming to you from a 20,000 naira account is consistent. If that 4,000 naira can take care of your bills and take care of the feeding for your family, and then that is what you should do. But if it cannot, then obviously you need to get capital. All right. So you got to get capital and then trade live, go live, right? Put in real money, go live. Okay. What kind of trader do you want to be? Right? This is the first thing, personality. All right. Do you want to trade passively or actively? You want to trade for a short time, or you have a full-time job. Maybe you're a doctor. I haven't met any of you yet. Okay, some of you might be, traders. You have a 9-to-5 job, right? If you have a 9-to-5 job that gives you, security, that's a fixed income at the end of the month, you might not be free to, trade like with a screen all the time. All right. So all that you can do is usually trade passively. So maybe before you go to work, you can place a trade. And then when you come back, you see how it did. Or during the weekend, you set alarms of levels where you want to buy. When the alarm beeps, even though you're at work, you can place a trade. And then you allow it to run, okay, until it gets to target. You can set all of that. You don't need to monitor the trade or look at it every time. You can set that, all right? So yeah, you want to answer that question. You also want to know, are you going to be a short-term investor or a long-term investor? All right, you have to answer all these questions before you pull the trigger, okay? And then when you come to trade, you have to now know what category you fall into. It's either, there are no in-betweens. Every trader falls into any of these 4 categories. First set of traders are position traders. These are traders that hold their trade for 6 months, 1 year, 2 years, 3 years. Position traders. They do the analysis on a monthly time frame, weekly time frame, right? And then when they place their trade, they don't look at it anymore. They just put in money and go away. They know America is a strong country. Yeah, America is a strong country and will keep to appreciate over time, over maybe some countries, right? And then they place a trade. And then they say for the next 6 months, dollar will keep rising. And then they just put in a certain amount and hold that position for a long time. Those are position traders. All right. And then we have what we call swing traders. Swing traders hold their trade for about 2 days. 3 days, 4 days, right? Okay. Excuse me, guys, just a minute. My mic and my video. Sorry about that, guys. The light is not stable. Need someone to fix it. Okay, sorry about that. Yeah, all right. Yeah, that's fine. You want to be a long-term investor, Caleb, that's okay. All right, you can stay here for a long time. Just do your analysis and then just place a trade and then let it run. Okay, some people hold trade for a few days. These are mostly workers. And then some people are intraday traders. They close their trade within that day. So they open a trade in the morning, and then in the afternoon or evening, you would have gotten to target or gotten to their stop loss, right? And then they're out, right? So there's these intraday traders and swing traders are related. Okay. And then you have scalpers, people who use short-term time frames. They just get into the market and get out of it, get into the market, get out of it. They're making, quick profits. All right. It's difficult. Okay. And then I always tell my people, right, okay, advantage of one over the other. Yes. Scalpers, the position traders don't need to spend time on their screen. They are just going to, place a trade and go their way. They don't ever look at it. Then maybe one Saturday or one evening, they just open their chart and see how the trade is doing. Those are position traders, right? And then swing traders. Now, when you do position trading, you're not looking for ROI at the end of the month, right? You're not looking for ROI at the end of the month. You're looking at, okay, this thing is going to rise and I'm buying it. And then you're not looking at managing 2% per trade, right? You are just buying. Maybe you buy it. You open $1,000 if you have a $10,000 account, and then you allow it to buy because you know it's going to buy for a long time, right? So yeah, that's what happens with position traders. Okay. So yes, then swing traders, you gotta, how do you join the Telegram group? Just search for City Forex Trading Institute, CITIFOREX, City Forex Trading. Okay, City Forex Trading Institute. All right, that's all. Just search for it and then you join it. Okay. Well, which of them is better? You got to stay as a swing trader. Don't go below a 1 hour time frame as a beginner. And then you have to do that for at least 18 months before you now become maybe an intraday. You can trade intraday, okay? Open and close a trade within the same day, but don't scalp. Scalpers are people that have stayed in the market long enough to trade with their instincts. Okay, so you need to be an advanced trader before you can scalp, because you can easily cherry pick, and then if you're not careful, if you try to scalp, you can start gambling, and if you have a drawdown, you can ruin your account. So the best place to stay is swing trading and then intraday trading. All right, so this is the best place to be. Swing traders make lesser amounts. It's obvious. If I take 10 trades and I expose 2% on each trade, and I have 5 losing trade and I have 5 winning trade, I'll make money. But somebody who is trading intraday, within a month, he can have more trades, more losses, and more wins, and make more return at the end of the month, right? So swing traders are for people who work. They just place the trade and then they don't have to follow it. And for you to do that, you need a slower time frame. I'm going to teach you all of that, All right. So yes, this is very important. What I'm about to share with you now is very important. Okay, this is why traders can make money. What you have in front of you, edge and probability, is the only reason. Sugar. Tell Chris to give the dog food. Okay, guys, sorry about that. Yes, when you are in your house, you have to still take care of house things. Yeah, my dog is disturbing. I think she wants to eat. All right, so you got win rates and risk to reward. Crucial. Before I come into this, I'm gonna show you something very important. Something very important. I told you we have Adam Koo in that City Forex resources, that channel where you have all the what's it called? All the materials. Okay. Adam Koo had this mathematics. Right. Now, see, first of all, let me show you what an edge is. Edge is that thing that gives you an advantage in the market. Okay. So remember what I told you: when you find an opportunity, you buy, you find an opportunity, you buy, you find an opportunity, you buy, you find an opportunity, you buy. Right. Now, let me explain what an edge is. If you take a coin, right, a coin is going to have two sides, head and then tail, right? Now, the outcome, when you flip this coin, there are only two things that can happen. The probability of anything happening here is 1/2. I'm right. All right. That's the probability, okay, which is 50%. All right. So we call this a 50-50 chance, right? It's a 50-50 chance of having head or tail at every point in time. Now, this is what an edge is. What if I add, a slight weight to one side of the coin? A coin is balanced on two sides. Every coin is balanced. Now, what if I add some weight on one side of the coin so that instead of having 50-50, heads will appear, this will be heavier, so it will quickly go to the base, so that I have heads 60% of the time and tails 40% of the time. Your edge is this weight that you have added to the coin. When you add some weight to one side of the coin, you have one side appearing more than the other side. If you toss or flip rather this coin 100 times, you're going to have heads 60 times and then tails 40 times. Now, but I want to tell you what, if I do this thing 10 times, the first 10 times, boy, there is no guarantee that the first time I flip it, I'm going to have head. I can flip it the very first time I have tail. Every outcome is unique. Every flip is unique. Every single flip is unique. The first thing you got to understand as a trader is that the outcome of every trade is unique. The previous flip has nothing to do with the next one. On every coin that I flip, every time I do it, there is a 60-40% chance of anything happening. I can flip the next time and I have head. Again, I have head. Again, I have tail. What I know is that when I do this 100 times and I check the data, I'm going to have 60 times head and 40 times tails. I don't know if this thing makes sense. Each outcome is unique. Each outcome, this could be head or tail. This could be head or tail. This could be head or tail. When I come to this next one, it could be head or tail. The thing is that the probability of having a tail is of a head is greater. Probability of having a head is greater because head, I've added weight to the coin and then there's a high tendency of head coming out. But even if I make it 95% and I flip it, sometimes, no matter how heavy one side is, that heavy side can still show up on the top. Sometimes. So every outcome is unique. Now, haven't understood this. Okay, haven't understood this. The next thing you want to understand is that, okay, now this weight I just said is your edge. So this extra 10% that you make instead of having a 50-50 system is your edge. So now you have a 60-40 chance of winning. Now, but let me tell you something, guys. Let me tell you something, right? Even if I have a 50-50 system, now I want to talk about win rate. What I've talked about is risk to reward. Now, for win rate, guys, if I have a 50-50 system, and let's say I have a 10,000 naira account, 10,000 naira in my trading account, I put 10K and I start to trade. On each trade, I take 200 naira on each trade, right? And then I'm no edge. I'm just trading. Maybe you just give it to your younger brother. You have a robot that makes sure that on every trade, you don't lose more than 200 naira. And then when you win 400 naira. Okay, so your risk to reward is now 1:2. All right, this is your risk and this is your reward. Okay, so you have risk to reward and then you have win rate, right? So now let's say if your risk is 200 naira, then your reward should be 400 naira. Okay, I'm correct. Okay, so sorry about that again, guys. Same issue. It's little or nothing we can do about it. So all we can do is when it happens, we just have to make sure we join again and continue where we left off from. Sorry about it. Okay. So unfortunately, I have lost everything I was sharing. Lost everything. So, but I will still continue. Please let me know if you can see my slide. Let me know if you can see my slide and hear my voice real quick, guys. Okay. Okay, good. Thank you. Thank you. All right. So what I'm explaining to you is very, very important, actually. It's very important. And then please, somebody check the time for me because I can teach all day long. Okay, so just check the time for me so that when I'm taking too much time, more than is allocated for this class, you let me know. We have 3 days to learn all of this, so we have a lot of time. All right. So yeah, we have to actually finish up on this. I'm going to just continue. I hope that you haven't forgotten all that I have said already. Okay. All right. So yes, so I was saying that, even if you have a 50-50 system, you take these bad trades, okay, and then good trades, right? Good trades, right? Your good trades, you win 400 naira, approximately 400 naira, okay, because of commissions and the rest. All right. You know what happens? You're going to make 20,000 naira on the good trade, and then you're going to have minus 10,000 naira. I'm talking about the 50-50 system. So you see, risk to reward is important. Now you understand why I do not take any trade that cannot give me as much as twice as my risk. If I put in 1,000 naira, I want to get 2,000 naira. If I can't get up to 2,000 naira, I'm not going to take the trade. I mean, even when you gamble in the street, you bet with someone 100 naira, you will not take 150. You are assuming that once you place that bet, you have lost your 100 naira. Right? I should teach all day long. All right. Right. So when you put in that 100 naira, you are assuming that you have lost the 100 naira. That's what happens to your 200 naira. When you put in your 200 naira, you are assuming that you have lost it. If you are taking this 200 naira back, you're not taking 200 naira anymore. You want 2 times. It's common sense. You want 2 times. Okay? That's what we're doing. I usually take as much as 3. I'll tell you what, I take as much as 7. If I catch myself in a reversal trade and I'm going in, and then the market trails, the market is moving in a trend, and I'm trailing it and it keeps on working, I keep on taking money out of it. During COVID, the market moved so much, I made a lot of money because the market was trending, was just moving, going down. And then we were following that trend. Right? So yes, so this is very obvious. At the end of the day, you have plus 10,000 naira. So you see that you got to combine your win rate. You got to combine your win rate with risk to reward. This is important as a trader. You have to understand this. When you are placing a trade and you put 200 naira, and you are seeing 100 naira profit. Traders close it. They take the 100 naira and go away. You're going to lose money at the end of the month. If that trade is actually good, it will get to 400 naira. If it's not a good trade, it will reverse and stop you out. I'm teaching good. Take note of some of these things so that when you go into the market, you do the right things. All right? Even if you have a 60-40 system, guys. Your win rate is 60-40, but your risk to reward is 1:2. You will not lose money. Look at it. You lose 200 naira whenever you are wrong. And you make 400 naira whenever you are right. This is good trade. This is bad trade. At the end of the day, you're gonna lose how much? 12,000 naira. Right? And then at the end of the day here, 16,000 naira. This is minus. This is plus 16,000 naira. So what? You have 4,000 naira profit at the end of the month. So you see, win rate is very important. Win rate is very important. Very, very important. Even if your trading system is bad, when you place the trade, you are losing. When you place the trade, you are losing. Right? But you got good win. You've got 1:2 whenever you are right. You make money at the end of the month. You make money. If you have a 10,000 naira account, you have 4,000 naira at the end of the month. 4,000 naira is how much? It's 40%. It's 40%. This is a bad system. But you make money. So understand that your edge comes from a combination of your win rate and your risk to reward. You have to understand this if you want to make money. So when you have a trade, don't interfere with it. If you have set a target, you enter here, you put your stop loss here, and you put your target at 1:2. From here to here, stop. This is your entry, your stop loss, right? And then your target. All right. Allow the market to move. If the market gets here and your entry is triggered, it might go up, come down, go up, come down, go. But make sure it gets to your target so that you have 400 naira if it's a winning trade. If it's a bad trade, it will stop you out and then you lose 200 naira. Keep it like that. Don't interfere with it. At the end of the day, you will make money. Right? So guys, I want to also tell you, all those guys on YouTube and no. Yeah, that's when you have somebody's giving me another mathematics. If you have I have a system that works 60% of the time. Okay, so it works 60% of the time and then it fails 40% of the time. As a matter of fact, if you are taking a reversal trade, market has inertia. It keeps doing what it's doing. If the market is going up, it will keep rising. There's a 60% chance that it will continue to do that. So if you're going to say, I want this market to reverse, you are taking the opposite side of the trade. And then you're telling the market to stop doing what it is doing. So the chances of that happening is less. It's a 40% chance of happening. But you can offset that little reward or that little chance of it happening with your reward. So you make more money from it. Right? But if you have this, you make 400 naira on this system, and then 40% of the time you lose 200 naira. You make a lot of money, guys. You're making as much as 24,000 naira, and then you're losing just 8,000 naira. Okay, this is plus, and then this is minus. Right? So you can see that you have a lot of money. All right, so this is very obvious. Right? You know that if you're starting with 10,000 naira in your account, placing 200 naira per trade, which is 2% risk on each trade, right? You're going to end up with, I think, 16,000 naira profit. 16,000 naira profit. Okay, you more than doubled your account by the end of 100 trades. Right? By the end of 100 trades, you more than doubled your account. Let's say you were only able to take 20 trades by the first month, right? You might not have up to 16,000 naira profit on a $100,000 account, but you have some profit, I can assure you. You have some profit. Yeah, somebody's saying I can even do 1:3. Of course you can, but I'm telling you what is obtainable, what is realistic, what we can do, the way the market moves, the way the computer prints the market. I'm going to show you all those things. Okay? Yeah, you can do 1:3, and of course you make more money. But the question is, will the market get to 1:3? You do your back test and see if this strategy I'm adopting, does the market always get to 1:3 target? How many times did he get to 1:3? How many times did he get to 1:2? You see, you look at all of that, and then you know which targets to set. Okay. So yeah, then the next thing you want to understand is probability. I told you a lot about probability before I lost my slide. All right, I told you that each trade is unique. If I put 200 naira on each of these trades, 200 naira, 200 naira, 200 naira, 200 naira, I'm hoping to make 400 naira or to lose my 200 naira. I'm hoping to make 400 naira or to lose my 200 naira. I'm hoping to make 400 naira or to lose my 200. I do not know on which of these trades where I'm going to get ahead. I have no idea which outcome will come out positive. That's why I tell you, if you see these guys on the internet who tell you that I've placed a trade and see how I made $4,000 on one trade, they are scammers. They're impostors. And they're trying to lure you to maybe buy something for them or do something with them. I don't know what it is, but you got to protect your money and know that these guys are liars. As long as you are in this market, nobody, I mean nobody, knows the outcome of any single trade. I'm going to explain this thing I just said again now in the next slide, where I start to teach you technical analysis. So, but for now, you do not know what each trade will do. Trade number one, you don't know if it will come out 400 or 200 loss. Trade number two, you don't know. But what you know is at the end of a collective number of trades, 200, 300, 20, 25, 30 trades, you will make money. That's what you know. You are sure about that. When you establish that, you know that, yes, I mean, you are in the money. That's what is consistent. At the end of the month, you can withdraw some profit. So you do not know the outcome. And then let me tell you why we say use only 200 naira. I told you yesterday about the guy who bought gold. Gold is normally sold at 50K, but it dropped to 20K. Right? It dropped to 20K. When it dropped to 20K, if you have 1 million naira and you buy gold with just 100,000, 5 bars with 100,000, you have 1 million, but you buy just 5 bars. And then your friend bought 50 bars so that he uses up all his 1 million naira. Do you know that gold can still drop for the next 3 months or 4 months, drop to 15,000? It can. It can drop to 10,000. And then this guy who bought all 1 million naira is uncomfortable. He's down 500,000. He's afraid. Gold is an asset, but he's scared. Even if gold is going to rise and he knows it might rise, he doesn't have the psychological resources to stay in that trade anymore. He quits and takes the loss. But you have 1 million and you bought just 5 bars. You're smart. You bought a little portion. If you're down 50,000 naira and you have 1 million naira, you're not worried. If gold eventually comes back and go to 75,000 naira, you have made money. That's how to trade. Nobody knows the outcome of anything. So if we get to the point where, the damn thing rises and we make 400 naira, it's good for us. But we do not know which trade will do that for us. And then again, you got to understand that there's something called clusters. Clusters of good luck and bad luck. No matter how good your trading system is, this 40%, which is bad, that your 40% bad can show up 3 times consecutively. You can have head, tail, tail, head, head, tail, 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 tail. You can consecutively. If you are risking 1/10 of your account size, I don't care how good you are, you're going to blow out. You lose your money. And I'll tell you why. Draw down. If you risk 1/10 of your account size, no matter how good you are a trader, no matter how good you are with TA, technical analysis or whatever it is that is prompting you, whoever it is that is telling you to go into the trade, no matter how good you are, if you risk up to 1/10 of your account size, you throw away your money. The max you should risk is 2%. The max, no matter how aggressive you are, 2% per trade. And I'll tell you why. There's something called clusters. If you lose 3 times in a row, you are down 6%, not down 30%. If you have a cluster, I mean, this is the reason why we're saying use 2%. It's not that we cannot just say, okay, let's use a big lot. We're using 2% per trade because there's something called cluster of good luck and bad luck. If you are up to 30 years, you would have had times in your life where everything went south. You feel the year is the worst year. You feel there's nothing positive that's happening in your life. As long as you have gotten to 30, you would have had it. There are times in your life where you are enjoying. Everything is working well. It's called clusters. Clusters of good luck, clusters of bad luck. They are there. Everybody have these clusters. It's there in the market. We call them winning streak and losing streak. But I'll tell you what, if you lose 3 times in a row, 4 times in a row, 5 times in a row, you can win also 5 times in a row, 10 times in a row. And if you're winning 5 times in a row and making 400 naira instead of losing 200 naira, you make a lot of money. And you cover up for all the 200 naira that you have been losing. That's how to trade. But if you have this losing streak and you have a drawdown, you suffer a drawdown, you're going to blow your account. And I'll tell you why. Drawdown to recovery is crazy. See what I'm saying? Drawdown to recovery, crazy, guys. Really crazy. If you have a drawdown of 6%, you can come back. You have 10,000 naira and then you lose 600 naira. It's easy to recover 600 naira. If you have a drawdown of 10%, now what you have is 9,000 naira. You need, this is your drawdown. Let's say you are risking 1/10, which is 10% of your account size. For you to recover a 10% drawdown, you need 11%. You know why? If you lose 10%, what you have left is 9,000 naira. And for you to get back your balance, if you take 10%, which is what you lost, 10% of 9K is 9,900 naira. 10% of 9,000 naira is 900. So you have not gotten back your 10,000 which you lost. So for you to get back your 10,000, you need 11%. It gets worse as you lose. If you lose 20% of your account balance, you are risking too much and you lose 20%, you're going to need 25% to recover. You know why? Because what you now have is 8,000 naira if you lose 20%. And if you make 20% of 8,000 naira, which is what is left in your account, what you have is 1,600, which is 20% of 8,000 naira. What you have here is 9,600. You have not gotten back your money. To get back your money, you need 25%. You need 25% of your capital, of that balance, to recover the 10,000 naira. It gets worse as you go down. If you lose 40%, you need 67%. As a matter of fact, when hedge funds lose 40%, they close down. Because if they are trading shares, it's going to take them 6 years to recover this money because they are making around 10% per annum. If they make around 10% per year, it will take them about 6 years to recover a 40% drawdown. So they cannot stay for 6 years without profit. So they shut down, they close. And I'll tell you what it does to traders. What it does to traders is this. If you lose 40%, you are struggling to recover. And now if you want to take, when you lose 40%, what you have less is 6,000 naira. If you have 6,000 naira, 2% of this amount is even smaller. Before you were using 200 naira on each trade. But when you take 2% now on 6,000 naira, you cannot risk, you're not using as much as 200 naira on each trade. You're now using around, instead of 200 naira, you're using 100 and something, maybe 120 thereabouts. That math is not correct, but around 120 naira per trade. That's what you now risk on each trade instead of 200. So you are now going to make just 240 when you make gain. So you can see this is the right thing to do actually when you have a drawdown. You reduce your lot size so that you can recover. Because if you increase your lot size, you continue to break down the account and you blow up the account. If you lose 50% of your account, you need 100% to recover it. I'm not joking. You need 100%. Because, see, if you lose 50%, you had 10,000 naira before. Now what you have is 5,000 naira. Am I right? 50% drawdown is half of your account blown. For you to get back this amount, if you take 50%, which is what you lost, you will have 7.5. Because 50% of 5,000 naira is 2,500. So you have 7.5. So for you to make back 10,000 naira, which is your capital, you need to double your 5,000 naira, which is 100% of increase. So you need 100% to recover a 10,000 naira loss. So when you look at the relationship between drawdown and recovery, drawdown to recovery relationship, when you look at this thing, you will understand why we tell traders to use a max of 2% on each trade. And then if we're saying each trade should be 2%, we are saying that the total number of trades that you should have open at every point in time, total number of open trades must not exceed 6% because of losing streaks. Even if you are losing 2% and you have a bad trading day, maybe psychologically, you're not balanced. You lack self-awareness for that day. If you follow your rule and you trade max of 6% open trade and all of them go bad because maybe your fundamental analysis or something behind bar is not right, you lose money, right? Excuse me. You lose money, you will not lose more than 6%. And then when you lose 6%, you need just about 6 point something percent to recover, right? Which is something you can get in 2 trades. If you have 2 winning trades, you make 4%, because if you're risking 2% per trade, you can make 4% on each trade. So when you have 2 winning trades, that's 8%, and then you are back up again, right? So take note of this. All right, so your risk per trade has to be 2%, and your total number of open risk shouldn't exceed 3 trades. So if you're risking 1% per trade, you can take as much as 6 trades, right? If you're risking 0.5, you can have as much as 12 trades. But why would anybody want to have 12 trades? Okay, so guys, take note of these things that I am saying here. They are the basics for everything that we're going to be doing in the subsequent classes. And then I'll tell you what, there are several ways you can get into the market. You can trade with your gut feeling. Some people will just see an advert on YouTube. This is how I made money using expert options, right? Let me show you how I did it. I bought this car with my expert options. All right, so follow me in these few steps. Let me show you how I did it. Now, guys, this is how I did it. Just open a trading account. We see here when it's rising, you buy. You see here when it's selling, you're going down, you sell. And now you can also buy your own car. Okay. You know what? You now go in and put in real money. Am I right? Put in real money. And then you see it going down, you sell. You see it going up, what? You buy. That's all right. It's gut feeling. You just feel it's going down and then you buy. See it going up and then you sell. Well, if you want to trade like that, it's okay. But I'll tell you what, it's difficult for you to use gut feeling. It's difficult for you to use gut feeling to buy or sell in this market. You got to stay objective. I have to be honest with you. You got to stay objective. Objective with your stop loss. Objective with your targets. If you use gut feeling, your gut feeling wants you to make $1 million in one trade. So if the trade gives you 2 times as much as you risk, you will not close it. You allow it to keep running. That's the disadvantage of gut feeling. So we have abolished or crossed out gut feeling. We don't trade with gut feeling. We don't trade with gut feeling. And the reason is you want to stay objective. When I say objective, you want to have an, okay, this is my A plus B. Anytime I see this A plus B, I know C is about to happen. I buy. My A plus B must have a point of invalidation. I know that if the market goes below this particular price, is bad. I will take a 200 naira loss. If it exceeds, if it's going in my favor, I'm taking 400 naira profit. If I do this 20 times, I want to see my edge show up. The other way traders trade is fundamental analysis. I'll tell you what, a lot of traders trade with fundamental analysis, and then they are usually position traders. These are traders that want to see what happens to the market in a space of 6 months, right? 1 year. Fundamental analysis is accurate, very accurate. Fundamental analysis is, well, if you know that America is solid and America is going to rise, America is having a good economy. Of course, currencies is directly proportional to economy of the country. If the economy is strong, the currency will be strong. Ghana's economy improved, and then CDs that used to be 2 million CDs and then is worth nothing is now worth a lot because the economy now is stronger. If you improve your economy, your currency improves. South Africa is now a good country, their currency shows up in the forex market. Nigeria is a terrible country, and so the currency can never show up. So the economy is what determines the strength of the currency. Fundamental analysis is taking variables of the economy. Employment rate, how many companies are doing well? Are they paying their staffs well? Are they having good earnings report? How many people are jobless in the country? All this data have a numeric value. They look at these numbers and compare them to what is happening in the past. If these numbers are increasing or improving, as the case may be, right? If the numbers are improving, what we now say is that, okay, this economy is rising. And then what happens to their currency? Their currency rises. So fundamental analysis is accurate. If you take fundamental analysis, you're going to make money, but I'll tell you the downside to it. It doesn't happen immediately. It doesn't tell you where to put your stop loss. It doesn't tell you where to take your target. That's the problem. So you cannot do a swing trade and expect to make money, open a trade on Monday and close it maybe around Wednesday or Friday, and then what you did is fundamental analysis. No, it won't work. So what do traders start to do? Traders want to take profits immediately. Today, tomorrow, next tomorrow, they want to take a trade and then exit it. So what they did is a mathematical representation of what is happening on the chart. And then they say, let's get into the trade on this basis. And then they go to technical analysis. Take note of this. TA, guys, TA is not accurate. TA is the edge that you put on that coin. That thing I showed you earlier. TA is the edge that you put on that coin. This is the reason why I tell you that when somebody tells you that, see how I made trade this amount in one trade, the person is a liar. He just got lucky. It's a fluke. He cannot do it repeatedly over and over and over. If you want to make money, you very fast, you stay with TA. Technical analysis does not have to do position trading. Technical analysis can do swings. You can take a trade today and close it tomorrow, next week, few weeks. You can take a trade intraday and close it by the end of that day. Right? That's TA. TA is just a mathematical representation that we say, the chart is always doing this. Anytime the market gets to this place, it will reverse. Anytime it gets here to reverse, anytime it goes here to reverse, then traders now say, okay, because price have memory. Anytime the market comes back here again, or as this market starts to go up, I'm going to buy. I'll buy here and put my stop loss somewhere here, believing that if it goes below here, I'm wrong. If it gets to this point, I'm going to take a 200 naira loss. So, but I'm not assuming that it will rise up to this point. Okay, but I'm saying that, okay, my gap from here to here, if I can get as much as twice, I'll take a 400 naira profit and go away. That is what TA is. TA is looking at the chart and seeing what it is doing and seeing how it has been behaving and seeing how it works. And then you now say, okay, this has happened here, market reverse, it happened again. The market reversed. Okay. It happened. Sorry about that, guys. It happened again, and then the market reversed. Okay. Call Chris. Call him again. Sorry. Okay, guys. So all right, sorry about that. Yeah, so as I was saying, TA is where many traders find themselves. And this is the probabilistic nature of Forex trading. We are saying that, okay, this is like saying that, let me tell you what I'm talking about here real quick. Now, I'm saying that a shoe, for example, a shoe is worth 15,000 naira. A pair of shoes is worth 15,000 naira. All right. Now, that's the normal price, 15K. Okay. Now, what happened? let's say, as Christmas is approaching, of course, a lot of people want this shoe, and then the price of that shoe will increase. Okay, to, let's say, it will increase to 30,000 during Christmas. All right, it will increase to 30,000 during Christmas. You know what? Now, whenever is maybe normal period, all the way from February down to about November, the price is just fluctuating from 15, it's just going gradually. Now, once we're approaching December, the price rises to 30K because there's a lot of demand, and then we maybe do not have so many pairs of that shoe, right? So what happens is, as the market gets to December, it stays right here, and then once it's 30K, December lasts for a few days, and then people don't want to buy anymore at 30,000 naira. Nobody's going to buy a pair of shoes at that amount. So what happens? It drops back to 15,000 naira, and then there's another December. It goes again to 30,000 naira, and then after that Christmas period, the price falls back to 15,000 naira, right? Now, again, traders are now saying that yes, this shoe, once December is approaching, or once it comes to 15,000, they don't sell it anything below 15,000 naira. So we are believing that now that December has come again, we are now going to put 200 naira on this shoe, betting that it's going to rise, because it usually rises during December. So what they do is they now say, okay, fine, we think it's going to rise, and then they put 200 naira on it, and then what happens? It rises, and then they make 400 naira. That's what technical analysis is. I'll show you the principles of TA. One of it is that history repeats itself. The market has memory. People remember that the price reversed from 15,000 twice. When it comes back to 15,000, they will buy, believing that it will rise. Is it possible for this shoe to go down to 10,000 naira? Yes, it is. It is possible. You think it's not possible? I'll tell you what. If this shoe is, let's say, this shoe is Under Armour or Nike or Adidas, right? Let's say it's Nike, and then they have a competitor, Adidas, right? Something like that. Now let's assume that this shoe that has been moving up and down like this is Nike, 15,000 naira, and then Davido now wore a shoe towards that Christmas period. The shoe is Adidas. He made a video with that shoe, Adidas shoe. And then this Adidas also follows the same trend with Nike. It comes down to, let's say, 12,000 or 18,000 or 20,000, and then it rises to 40 or 50,000 every December. Now, because Davido wore this Adidas shoe, that December, everybody will go and buy Adidas shoe. Or let's say it's this lady. What's this lady that's very popular? Oh, I don't always remember all these people, their names. There is a lady that is very popular. Not Nicki Minaj. She's like Nicki Minaj, but I've forgotten her name. Cardi B. Let's say it's Cardi B that wore this shoe. She came to Lagos as she did last year. I was with Cardi B at the center there in Lagos. I was in Lagos during that Christmas dirty December period, So she came, let's say the shoe she wore was Adidas, and then everybody wants to wear this shoe. So now nobody's patronizing Nike. And because Nike increase their supply, but demand drops, you know what happens? Nike will say, oh, we're not selling this shoe, so let's reduce the price to 10,000 naira so that people can buy. Am I right? I am right. You get stopped out. So it is possible because TA is only helping us to make money fast. Fundamental analysis, it works, but you can't make money fast. You can't make money fast in fundamental analysis. It takes time. But TA, you can make money fast. But the problem with TA is that it is probabilistic in nature. It can drop further. It can keep falling. And then it can crash to 7,000 naira per shoe. And then, you lose money. If you open a trade here and you put 1/10 of your account, you have lost 10%. But of course, If you are right, you will make 20%. And then this is what some traders do. They take a good trade, they take a bad trade, and then they show you the one that is winning, and then they see how I made 10,000 naira in one trade. They risked all the money in the account. You got to be careful. All right? So this is something that I need you to understand. This is how we trade. This is how we trade. This is how we trade. We trade with TA. And if we trade in TA, it means that the outcome of each trade is unknown. But because technical analysis tells us that history repeats itself, we can work with it and say, okay, if I have a pattern and I recognize this pattern and this pattern is repeating itself every time. Oh, okay. Right? History repeats itself. History repeats itself. Every December it rises. That's history repeating itself. Another name for this thing, some traders will say is the price. Price have memory. All right? Price have memory. If the market gets to a certain point and it reverses, once it gets to that point, traders think that if it gets to this point again, it will also go up. History repeats itself. Market has inertia. It continues to do what it has been doing. Another thing again is price discount itself. If Donald Trump or Biden says something and then it affects the currency of American currency, it will reflect on the chart. I don't need to go and listen to the news. So TA will work. I don't need fundamental analysis. I don't need earnings report. I don't need non-farm payroll. I don't need the amount of people that are unemployed. I don't need the amount of people who lost their jobs. I don't need all those data. If all those things are happening, it's going to reflect on the chart. The prices will drop, and I'm going to see that, oh yeah, the market has a downtrend, and then I sell. And then lastly, prices moving trend. This is why we can make money. If they say price moving trend, we can only make money when the market is going up or when the market is coming down, right? If the market moves sideways, we can't make money. So the market has to move in trend. So it moves in trend. It goes from an uptrend to a downtrend. It goes from uptrend, goes sideways a bit. It either goes up or goes down. If it's going up, it goes into another uptrend. If it's going down, it goes into a downtrend. That's the way the market moves. It moves in trends. All right? And then what is TA? TA is a methodology that curious traders employ to identify trends. So what we are doing is identification of this trend. We want to identify the trend. We want to identify the trend. When we know that it's an uptrend, we try to buy. I'll tell you in a simple, if the market is going up 1, 2, like this up, traders see rising bottoms. This is higher than the previous one. And then they will draw a line. They draw a line like this. And you know what they're waiting for? They're waiting for the market to come back and touch the line. Once the market comes back and strikes this line and gives them a candle that is favorable, you know what they will do? They'll take the height of this candle. And then they'll measure it twice to the upside. And then if the market now starts to go up again, they will make twice as much as they risk. This is market moving in trend. So what are they waiting for? Market is moving in trend. They are not going to buy here. They want a discount. So they get a cheap price, and then they take an entry there, and then they look to take twice as much as they are risking, which is 4% if they are risking 2%. That's what TA is about. That's what TA is about, guys. You can combine TA with fundamental analysis, but I think fundamental analysis is very, very difficult, because anytime you get a data, it usually means buy and sell at the same time. So it's difficult. It's very difficult to use fundamental analysis on currency trading. It's difficult. I'll tell you, it's really difficult. There have to be major events. If a ruling party is going to step down for another ruling party, you can use that as a basis, right? Election, something, you know that, okay, for the next 2 years, this country is going to do well, right? So it's difficult, but it's possible, right? You can combine both. Okay. All right. So yeah, talk about prices moving in trends. Well, yeah, when we are dealing with technical analysis, we're looking at Elliott wave, we're looking at trend lines, support and resistance, trend reversal. I'll tell you what, the only time when you are allowed. Okay, I will, Jeremiah. The only time when you are allowed to take a reversal trade is when the trend line breaks. Just take note of that. When the trend line breaks. So if not, if you identify that it is an uptrend, the only thing you are looking for is a discount price. Discount price. You want a discount so that you can reach your 1:2 target. Discount price, you reach your 1:2 target. Discount price, you reach your 1:2 target. Is that okay? Discount price, you reach 1:2 target. So the only thing that can warrant a reversal trade, because I see traders who think that the market has gone too much to the upside, and then they start to sell when it's still an uptrend. Okay, that's wrong. Okay, that's trading foolishly. Market has inertia, it will keep going up. The only valid time where you can take a reversal trade is when the trend line breaks. All right, and I'll tell you why in the subsequent classes. Okay. Yeah, and then of course there's something we call trading range. Trading range, discount prices. Let's say the market is going up like this. Instead of buying here, because you know the market is going up, right? You wait. The distance from here to here. This is your discount. It's expensive here. If you're going to, maybe you sell biscuits, you can't go and buy them 10 naira from the market and come back to your neighborhood and sell it at 10 naira. You go there and buy at maybe 8 naira so that you can sell at 10 naira and make profit. So what you have here is the discount price. So that when the trend resumes from here to here, you would have made profit. But if you bought here, you won't be able to reach your 1:2 target from here to here. But if you bought here, you can reach your 1:2 target. So this here is the discount. Okay. All right, so these are the things I'm going to teach you in the course of this workshop, everything here, but not in details. All right, in the subsequent classes, I told you that you learn from now till the end of December for free, but I can't teach you all of this in a 3-day workshop. So what I'm going to do is to get you in gear so that you can start trading. I'll give you a simple trading strategy so that you can go into the market and start buying and selling. Then in the future, all right, we will learn all of this in details. I'll tell you how to draw a trend line correctly, support and resistance correctly, so that you don't have so many lines in your chart, how to trade reversal, and when to trade reversal. You don't trade reversal all the time. You know when to trade reversal. And then, of course, I'll teach you bars, okay? Simple Forex chart, and then bars. So these are all the things I'm going to show you. These are all the things that comprises, technical analysis. All right, so I'm going to teach you all of this. Anything added to this is just Jara. This is where to begin for TA, right? So you will learn all of this and more. All right. So, but once you have a grip of all of this correctly, you can start trading confidently and comfortably. Okay. All right, guys. So yeah, next slide rather. So this is the Elliott guy. This is the Elliott guy, right? Elliott says that prices moves in trends and with a wave of 5. So he's saying price will go 1, 2, 3, 4, 5, and then it will now have a correction. Correction is like resting. Okay, so market doesn't go straight up or straight down. Market will go up, come down, go up, come down, go up, come down, like that. All right. And then Elliott is saying that when it does this thing 5 times, it will rest. So everything from here to here, we call it an impulse wave, or it says the main wave, right? Impulse wave. And then everything from here to here is called the correction wave. Correction. So this is the correction is what I meant when I was talking about discount. This is the correction. It's like taking a breather. Okay, you breathe in, breathe out, breathe in, breathe out, breathe in, breathe out, right? You know when you look at it that this is an uptrend, but there are times when the market is coming down. There are times when the market is coming down. So, but you know that you've got an uptrend in front of you. Then when you do, you look to buy, right? So take note of that. Very, very important. Take note of that. So yeah, so there's a correction. And then he's also telling us that even when you look at each of these impulse wave, you are still going to find a similar scenario of these 5 waves. And then on the correction, you are going to have a scenario where you have 3 waves, A, B, C. That's what he's trying to describe here. See it 1, 2, 3, 4, 5, and then rest. So even on each of these, you are going to have 1, 2, 3. So these things are broken down. Look at it. It's broken down. It's broken down. It moves in waves. So this is justifying TA saying that the prices moves in trends. And then I'll tell you what, these are the guys that got tired of fundamental analysis. They got tired of fundamental analysis. We want to make money quickly. So they started to do their findings, and then they discovered that, okay, this is how the market is moving. And it repeats this thing every time. It repeats this thing every time. So if that is the case, if market repeats this thing every time, we can structure a plan so that we can catch the waves when, you know, we can make money on this. If the market is following a particular structure, we can actually make money if we can recognize whenever this turn is about to happen. This is what a regular Forex chart looks like. And you can see here, we have these waves, you know, 1, 2, no, you have 1, sorry, 1, 2, 3 is the longest, right? 3, 4, 5. Okay, and then you have the correction, A, B, C. So you can see that this is how the prices move. And then in each of these, you will still have 1, 2, 3, 4, 5. And then here you have A, B, C in the pullback. Here you have 1, 2, 3, 4, 5. And then you have A, B, C. So, I mean, you cannot, that's what he's trying to describe here. You're going to have 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. So he observed the repetition. And then traders even play straight with this. They tell you, okay, when a trade is 1, 2, 3, 4, 5, A, B, C, once it is complete, there is a pattern here. And then they believe that this is a falling wedge. It's going to break out to the upside. And then they place the trade for a buy. That's how technical analysis started. They know that, okay, this thing can happen relatively fast. So they use it to place trades. All right. So that's where we started TA. And then what traders started to do is, okay, we're not sure if this thing is going to still pull back further or it will go up. So what we can do is, let's do mathematics here. Let's calculate our risk. Let's put in just 2% so that if we are right, we make 4%, right? So that's the genesis of technical analysis. And then that's what you got to understand, that if you're doing technical analysis, you don't know the outcome of the trade. It can go up or go down. It can go in your favor or go against you. So if that's the case, I mean, you cannot put more than a little, your microchip on it. All right. And then, yeah, these are the rules. Elliot says this thing moves with a 5-wave pattern. You have wave 1, wave 3, wave 5. These are Elliot's rules. All right, and they are not important for you right now. But what he's trying to say is that wave 1, wave 3, and wave 5 are all impulse waves that shows you the direction of the market. And then wave 2 and wave 4 are just counter moves. They are correction waves. Correction waves. All right. And then every other rule there is just defining the recognition of this 5-wave count, where he says that wave 3 is never the shortest, meaning that wave 3 is usually long. All right. It's never the shortest. And then he's saying that he also says that wave 4 will never enter into wave 2, wave 1 rather, right? So if you look at the pullback that comes from here, you see that wave 4 will not go deeper than wave 1. Okay, it doesn't go deeper than wave 1. You just have this, and this, because wave 3 is supposed to be very long. Okay, so that is it on Elliot. All right, so having known this, we can, I think we will stop here. Okay, because of time. I told you if you leave me, I will stay with you all night. All right. So, but I've got to stop. It's 7:30 already. Okay, so I have to stop. Tomorrow we continue. I will teach you how to identify trends. I have lots of lovely slides to show you, many interesting slides to show you, many interesting slides. Okay, so I'm gonna show you. Still talking about the introduction to technical analysis. I'm going to show you how you can identify trends. I'm going to show you a simple trend following strategy tomorrow, and then no, not tomorrow. Tomorrow is Sunday. It's a day of rest. Okay, so we're going to continue on Monday evening. All right. Yeah, my phone number is on a slide. Okay, I will just share that slide with you before I end the class. While I'm taking your questions, I will share that slide. All right. So yeah, I'm going to show you some of these things, and then we're going to see some terminologies that we use, so that when I start to calculate your stop loss and all of this, you don't get lost. These are the slides I'm going to share with you on Monday. So we'll look at all these things, some of the terminologies, some of these things I mentioned them. Some of them you just need to know them. When is the best time to trade? You know, trading section and all these things. So these are some of the things I'll teach you. What are the trading currencies, the pairs? What are their names? How do you identify them? You know, all these things are very lovely sites that I can share with you. All right. And then how to, you know, read a quote. All right. Yeah, thank you so much, guys. So I'm going to share all of this with you. Trust me, I have very important information to share with you. These are things that if you learn them and learn them correctly, you're going to avoid a lot of pitfalls. I'll teach you everything you need to know. Everything. I believe I have all the information that you need. So if you stay with me, you will get all the information. You will avoid yeah, many pitfalls. Thank you. So I'm going to go back. So yeah, just then stay. Open up the microphone. Stay with me, so that those of you who have questions to ask can ask me your questions. All right, those of you who have questions to ask, you can unmute yourself and ask me questions. And then just make sure your questions fall within some of the things that we have learned today. And I'll tell you what, if you are curious, okay, so I've allowed you to unmute yourself. So yeah, if you're curious about learning anything at all, just wait. I believe I have everything you need to make money. So just wait. Just wait. Give me some time. Okay. So within the course of the workshop, I'm sure I'm going to teach you a lot of things, answer a lot of questions that you might have. So if I don't answer your questions, just present them to me, and then try as much as you can to join the subsequent classes that we're going to be having. You know, I'm going to be teaching you like this throughout December. All right. And then by the end of this workshop, you'll be able to place a trade. And I want to encourage you, if you can maybe borrow a device, maybe your sibling's device, you know, get a device from someone that you can use, right? So that when I tell you, open your indicator, include this indicator, but put your stop loss and all of this, right? I'm going to stop sharing my slide, and I will share my my web camera, and I'm going to show you on my phone. So I'm going to be showing you what I'm doing. So I expect that you use the other device. You're watching and listening to me with one device, and then you are practicing what I'm saying on the other device. This is a workshop, and usually we don't have workshops online, all right, because it's supposed to be practical, but we can have it practical right here. Okay, and I want to tell you something. I did not have anybody do a webcam like this and take their phone and show me press this or press that. You know, I figured the whole thing myself, right? So I figured it out, right? And yeah, I can trade right now. So I've told you, you can learn. The only limitation that you might have will be yourself. You're the only stumbling block that you might have. All right. So if you look to make money, you can make a lot of money here. Okay. And then there is no limitation. As long as you avail yourself, you make money. I want to take your questions. If you don't have any question, no. The slide is not in the resource group. Okay, the slide, I can only share my slide because, and then maybe portions of the slide, I can share them. But it's a property of the company, City Forex. I cannot give the slide out because of copyright issues, okay? So that you don't pick the slide and edit the content of the slide, right? So I can't give out my slides. Yeah, but I've told you that while you are watching, you can capture the screen. So if you want the slide, you can capture everything on the slide, right? So, but the slide cannot be given to you. Yeah, I let me be sure. I believe you can unmute yourself. If you don't know how to unmute yourself, you can raise your hand. I will do it for you. Okay.
Hello, Mr.
Yes.
Bennett.
Yeah. Good evening, Mr. Lukmon. Am I correct?
Yeah, thanks so much.
Yeah.
Today is my first time to
Oh,
attend
really?
the meeting,
Oh. Okay.
but
Sorry. That means you
I've
missed a
gone
lot.
through the yesterday on the
Ah.
YouTube.
Okay, that's good. But yesterday's class you went through is not yesterday. If I teach my seminar the same slide 100
Okay.
times,
Wow.
it's going to be different 100 times. Right? The same presentation I'm giving to you today, if I take it again right
It'll be
now
different.
with another set of students, it will be different, I can assure you. It will be
Okay.
different. So, yeah, but
That's
it's still almost the same thing, yes.
that's a very good one from you. I really
Yeah,
appreciate, and
thank you.
I will follow through. We'll continue on Monday, as you said.
Yeah, all right, sir. All right.
5 p.m.
Yeah, 5, I believe so. I don't know what your agreement is, but I will normally get a message from the coordinator telling me what time I'm supposed to appear live with you guys. So
Okay. Then
yes,
when
so
do
the
we have the
time I
practical
believe
class?
the time. Practical
What?
class is the practical class is going to happen in the course of this workshop, the 3-day workshop. This is day 1.
Okay.
Yeah, Monday day 2, Tuesday day 3.
Okay.
Yeah, so we're going to have these 3 days. In the course of these 3 days, I'm teaching you some very important things now. If not, this is supposed to be a workshop. So, but this is part of the workshop. I'm showing you things, right?
Okay.
Yeah, so the only practical thing I need to show you is how to predefine your risk so that whenever you are wrong about a trade, you don't lose more than that 2%, which is maybe 200 naira or $200 or $2,
Okay.
depending on your balance, right? So that is the practical part. Every other thing is just maybe me showing you my slides where I have some of these terminologies I have to explain to you. But every other thing is practical. We're going to look at the market. I'm going to share the market with you, and then we will take trades from there. So all of that is practical.
Okay, but if I want
Good
to
evening.
come to the office for physical, is it allowed for physical training?
Yeah,
Is it
sure, of
allowed?
course. Yeah, very well, very well. We have a very conducive environment for you to even come with your computer and place your trades. If you're an active
Okay.
trader, you can come to our office. It's open from 9 to 5, right?
Okay.
So you can dress up like a trader, wear your suit, mustn't wear suit. Yeah, just come to the office, right, with your computer and then sit right there and then place your trades, right? But
Okay.
these seats are owned by people who have paid for the full-time course for 3 months. So they pay, and then each chair is numbered. So Mr. A has a chair number, right? So when the owner of the chair is there, the chair belongs to him for that 3 months. So, but for now, it's free and accessible to everyone. Yeah.
All right. Thanks so much.
You're welcome, sir.
Good evening.
Yeah, good evening, sir.
Yeah, thank you so much for this interesting
Cover.
lectures and teachings. They're really quite interesting. I got them inspired and I really enjoyed it.
Yeah,
Actually,
that's good to know.
thank you so much. Yeah, you're doing a
Let's
good
know
job.
your name because we know
Okay,
we're
my
not
name is
physical. People want
okay.
to know.
Sorry, my name is Onsuchidi.
All right. Once Chidi, that's
Yeah,
fine.
from Owerri. I'm calling from
Okay.
Owerri. Yeah,
Okay.
actually, I really enjoy this. But there's something I am looking at. I don't know the resumption time. Like I chatted, it's sort of like yesterday. I couldn't join due to work.
Oh.
And I'm intending to be a passive one for that matter. So work is really what I think is keeping me from turning up in time. I couldn't join today because today is Saturday. I was able to.
Oh.
Saturday, Sunday, no lecture. But then I'm trying to, if is there any way you can be maybe shifted early to at least 1 hour up, like 6 p.m.
Well, you know what we did? What we did
Yeah.
was we cannot, unless you are jollof rice, you can't please everybody, right? So
Yeah.
we do a pool. I recommended that for the coordinator. I think Nelly did a pool and then got everybody to choose what time is convenient for them, and then they came up with this time. So it's not something that one person can just come up and say, let's do it like this. You understand?
Okay.
So she gave me the results of the pool, and then we had that 75% of people who voted for 5 p.m.
Okay. Okay.
Yeah.
Well. Okay. That's
Yeah.
great.
So,
But
but what we can do for you is usually
yes.
most of the classes are recorded, so you can
Okay.
now come back maybe when it's convenient for you. You can join us, and then
Okay.
go back and pick up the part where you missed in the
Yeah.
recorded version, and then you complete that. That's all you can do. Yeah.
Okay.
Yeah, so that's the only way we can accommodate the other 25% of the people who are interested but can't make it.
Okay. Thank you so much, sir.
Yeah.
Thank you.
Hello, sir.
Yeah, hello. Your name, please.
Yes, I'm Anthony Alavi.
Okay.
Yes, sir. How can we get the recorded version of this seminar?
Okay, usually there are a lot of glitches. If not, I would have just told you that immediately after I drop.
Okay, sir.
Yeah, immediately after I drop, you will get it. But the videographer have to work on the video so that when you are playing it, it will make sense to you. Because if you get it raw like this, there are lots of glitches, there are lots of lagging and all of that. So they have to adjust it before they can make it available for you. But it's going to be available usually at the end of the workshop. You can pick it up. Yes.
Okay.
So the advantage of being here presently is that you can talk to me like this, right? You can share it. And then I think there is another effect you get when you are here live, right? You participate more, you know.
Thank you, sir.
Welcome. Any other question? I must commend. Yeah, hello. I must, before you start, I must commend the way you guys handle this microphone. You put it on and talk, and then you put it off when you are done. I appreciate it. Thank you so much. All right, sir, you can go ahead.
Thank you, sir. So, sir, I wanted to find out this that we can.
Sorry, your name, sir.
I do have a question.
Okay. Hello. I think we lost you. We lost you. You have to repeat what you're saying. Begin with your name again. Sorry about that.
My name is Spiff.
Okay, Spiff.
Yes. So I'm joining you from Port Harcourt.
All right.
Okay. Thank you for the lesson so far, sir.
Yeah, welcome. It's a pleasure.
I wanted to know the Elliott wave. Is it something we can count on?
Yeah, Elliott wave. The problem I have with it is that it's difficult to recognize. You know that counting takes a lot of time, and then Elliott wave is good, but that's not the strategy I'm presenting to you. I'm just telling you, okay, this is the guy that says, okay, price moving trend, and then he showed us, and then he said that this thing has a regular pattern or repetitive pattern, and then if market has a repetitive pattern, we can start to look into it and observe certain things that we can say, okay, this thing happens often. Is an edge for us, and then we can use it to play straight. So, but Elliott wave itself is too subjective. You need an objective plan. Objective meaning A plus B equals C. Anytime this happens, I want to buy. Anytime this happens, I want to sell. But counting is not very easy. And then saying it will pull back, you're not sure if it's going to pull back to this point or go further, right? So you're going to lose a lot of money trying to pick, all those levels. So we need something that is a little more objective.
Okay.
So if you grow and then you study more, there are people who do Elliott wave. If you go to Instagram and go to all these places, you see people who focus on just Elliott wave, and then they do it. So you can, but I don't trade with Elliott wave. I don't like it. It's too subjective. I like to take twice as much as I'm risking, and I can't do it with Elliott wave because I don't even know where the market wants to reverse from.
Okay. So another question is, when are we going to learn how to set up our MT4? Because
yes, tomorrow. I believe today everything I have showed you is very important. It's very easy for me to just open the MT4 and tell you buy and sell, right? But I need to teach you all these things that I have taught you. They are very important for your foundation before we now actually buy and sell. So before we buy and sell, I'm going to show you how a trend forms, and I give you a simple trend following strategy. I call it Thunder. That's what I gave them last week. So I'll give you Thunder. It's a strategy, right?
Okay.
Thunder strategy. And then you use it to buy and sell. Okay, so I'll now show you how to set up the MT4, how to get a brokerage account, how to buy, how to sell. Buying and selling is very easy. Just click a mouse and then you are a trader. So all those things are not something to struggle about or struggle with. It's like buying a new handset and you're trying to understand the features of the handset. Is that easy? Or downloading a new app and you're trying to understand the environment of the app. Okay, so it's not difficult. So this part is not difficult. Okay, it's just that because you are new to it, you'll be struggling with, okay, how do you draw this line? How do you do this? How do you do that?
Okay, sir. Again, I wanted to join as per your recommendation, I wanted to join the resource group. I sent a message via Telegram, and I think I'm finding it difficult
To join.
yeah.
Did you speak with Jeremiah?
I sent a message across to Jeremiah, but some
Yeah.
other person replied me who is
Okay.
not an admin.
Oh, okay. Repeat that immediately after this class because I'm sure Jeremiah is here and is listening to you.
Okay.
So just go and request for it again, and then he can add you on that group. So he will
Okay.
add you. So once you show him your proof of payment, he will add you to the group.
I don't even have the account number.
Yeah, he will give all of that to you.
Okay. Again, sir, are we having this recording on YouTube? Will it be on YouTube?
Yes, the thing is, not immediately, but it will be there.
Okay.
It will be there, so you can pick it up. And then there are other ones too that we have had that are not on YouTube. We're going to also upload all of them. So
Okay.
we'll just have their dates so that you know which particular one you want to watch.
Okay, sir. Thank you. God bless you, sir.
Amen. Thank you too.
Okay, sir.
Okay, can I ask a question?
Yeah, why not? Go ahead, please.
Hello?
Yeah, your
Okay, I
name
was
and
trying to
then your
download it.
question.
Sorry. My name is Elizabeth.
Okay, Elizabeth, go ahead.
Did you get there?
Yeah, sure. Elizabeth, go ahead. Go ahead.
I was trying to download the MT4, the info.
Okay, you had issues
Was
downloading.
asking for MT4 for PC.
Okay, Elizabeth, you're having technical issues, and I want to believe that it is coming from the network. You need to listen to yourself. Okay, so see what we're going to do. Just go to the chat box and type. I will read out your question for you. Okay.
Forex institute something register signing.
I am sorry. It's good to have you back, but I have muted you already because of the glitch. Okay. Somebody's already saying that you're using Glue Network. Yeah, so your voice was dragging for a long time, so I couldn't hear you. Nobody heard you. So you can type, all right? So type instead. Yeah. Oh, yeah, somebody.
No, don't that.
That's good to know. All right, Messi, that's good to know. All right, that's fine. Okay, Elizabeth is saying that she's using MTN. Oh. Those of you that say she uses Glue. All right, Elizabeth, you can talk again. I think you're there. So you can ask your question again. Yes, please.
Okay, I tried downloading. So to my question, I tried downloading MT4
Yeah, you tried downloading MT4. Go ahead.
earlier today,
Okay.
but it was showing MT4 for PC for iPhones. So I tried for the PC.
Are you doing it from your computer?
I tried. I went to use my system, but it wasn't going through.
No.
I was thinking maybe.
Yeah.
Okay.
You cannot download MT4 for PC. You can actually, but when you want to pick up an MT4, you have to pick it up from the broker's website. It's just like going to UBA's website to get UBA's MT4.
Okay.
So you can't just go online and say you want MT4.
Oh, no wonder. I've been seeing different people coming up, like different traders, and I was like, okay, I don't know all these people. So why is this guy not downloading and bringing out people's form to fill up the form for me?
Yeah. So it's form from the broker.
Okay, so now to download MT4 for my PC, do you have to go to City Forex or I have to download for my phone alone?
Yeah. The City Forex itself, like the major City Forex, is only dealing on shares. So you can't do it through City Forex, but we recommend IC Markets. international capital markets, they're very good, or Forex Time, that's FXTM. So you can go to FXTM's website and then get it, or go to IC Market. If you go to our Telegram group, I have a link that takes you directly to IC Markets, and then you can open a demo account. I have a PDF that shows the step-by-step process to download your to your PC or to get a demo account started, right? So everything has been laid out for you. So just go to our Telegram group and search for anything you want, maybe MT4 download or getting a demo account. Just search for it, you will find it. All right, I think she's, yeah. Okay, I think I want to believe that is all. All right. Okay, I can see you guys are chatting with each other. That's interesting. Yes, you can continue your conversations in the group. Yeah, MT4 for yeah, you should download MT4 for Android. That of Android is different. When you download MT4 for Android, you connect the MT4 to your broker. So when you create a brokerage account, they're going to give you an account number, something like an account number. It's called your MT4 account and login details. So you pick up that thing from your mail and then you fix it into the MT4 that you downloaded for Android. So when you put it there, the account will be connected. So your brokerage account will be connected to your MT4. And then you can trade from there. You can connect multiple brokers to the MT4. But when you're dealing with your PC, you have to download each broker's MT4. So when you're looking at the MT4, it will have the icon of the broker, right? We'll have the icon of the broker. Okay, I believe I've answered that question. All right, guys. Yeah, so that's all for now. I'll see you guys on Monday. I am excited to be with you. Of course, I enjoy teaching. So I am doing all of this effortlessly. All right. So I will see you on Monday. All right. So as long as you avail yourself, I've told you you're going to get everything that you need to make money. Yeah, you're welcome, Elizabeth. All right, guys. So I'm going to end the meet. Welcome, everyone. Thank you too. Thank you for taking out the time to be here with us. All right. And then I'm going to see you guys on Monday. Peace. Cheers, guys.